Alright, Assalamualaikum warahmatullahi wabarakatuh. Today we continue again with another part of business computation of tax computation for business income, which is now we are looking at business expenses. Okay, so when we're talking about business expenses, what we need to know is that number one is the business expenses deductible or is it not deductible? Okay, is it allowable or non-allowable? So those are the two terms that we will be considering when we are doing or testing business expenses in order to compute our statutory business income or adjusted business income before that. Okay, so under business expenses, alright, if you this one would be chapter 14 of your income textbook. So before we proceed further, we have to look at the definition of when the business expenses are actually deductible. Okay, so basically we follow the general requirement under section 33 subsection 1. So when we're talking about deductibility of any expenses, normally we will follow this guideline. Okay, so if you refer to your textbook, chapter 14, page 2 to 8, you can see there the definition of or whatever statement that clause that talking about deductibility of the expenses are being quoted under section 33 subsection 1. So from there, we actually extract what are the conditions that to be considered when we want to test whether the business expenses are actually deductible. Okay, if you refer to the textbook under para 1.0 under the legislation, okay, the business expenses have to fulfill the following conditions in order to secure a deduction, meaning they must fulfill all the following conditions, then only they can, okay, or they are allowed to be deducted. So what are those conditions? Okay, so number one, alright, if you refer to the slide, it must be an outgoing or expenses. Okay, and must be wholly and exclusively incurred in the production of gross income. So every single concept has further definition or elaboration in order to determine whether the expenses are actually deductible or not. Okay, so number one, you want to see or we are talking about outgoings. Okay, outgoing and expenses. Okay, expenses is quite clear, okay, because expenses is actually referred to the normal disbursement that incurred by the business owner or business in order to produce business income. So basically whatever that you have actually spent, all right, or expenses that you have incurred, therefore it will be considered as an expense. Alright, outgoings is actually referred to things that you capture under the operating expenses of the business. However, it might not incur directly. Okay, for instance, like when talking about expenses, there are outflow of cash. But in terms of outgoings, it's still part of the expenses, considered as part of the operating expenses in the business. However, there is no actual cash flow outgoing. Okay, for instance, like alright, for instance, you have business losses. Okay, business losses might be due to defalcation of the employees. That means employee do a fraud of some fraudulent activity, so they take the money of the business. So business make a loss. Okay, from the defalcation of the employees. So in normal practices, this loss or in accounting perspective, normally these losses will be recognized as part of your operating expenses, right? So for tax purposes, these outgoings can be considered because if it is related to the business activity, therefore this outgoing or these losses will be deductible. Okay, another example is bad debts. Alright, so bad debts is actually when you sell and you cannot collect. At the end of the day, you cannot collect. Alright, because when you're talking about debts, there are several steps before you come to the bad debts. Okay, so the first thing, of course, when you incur your sales, you recognize as part of your receivable. But up to a certain point, you will recognize that that receivable might not be payable, okay, might not be collectible. Therefore, you have provision for doubtful debts. Alright, so once you confirm that the debts can no longer be collected, therefore you recognize that debt as a bad debt. So from the business perspective, this would be considered as a business loss. Okay, so therefore this also part of another example for outgoings. Alright, so again the bad debts also will be recognized as a part of deductible expenses. Okay, the next one will be wholly and exclusively. Okay, the wholly is actually referred to page 229. If you refer to page 229, you can actually see in the case of the meaning of wholly and exclusively. Wholly would actually refer to the quantum of the money expended. So that means the amount. Is it the whole amount that you incur for you to produce business income? Or is it if you incur 100, only 30 ringgit is actually incur for the purpose of business, and then another 70 ringgit is actually for another reason, not for the purpose of the business. So in that case, what will happen is that the 30 ringgit would be considered, okay, the whole amount of that 30 ringgit would be considered only for deductibility. Alright, so it's actually referred to the whole amount. If you want to capture whatever amount that incurred, is it the whole amount to be recognized as a deductible expenses, or is it not, or partly will be considered as a deductible expenses? Okay, another one will be exclusively. Okay, exclusively is actually referred to the motive or intention. So what is your motive when you incur that particular expenditure? So is the expenditure that incurred in relation to produce business income, or is it for the purpose of self self reason or personal reason? Okay, personal purpose. For instance, you incur travel expenses, alright, from your office, okay, to your home. So that is actually more related to personal motive of, because you need to go back to your home, alright. So in other words, it's not for you to generate business income. So in that case, therefore, these particular expenses will not be deductible. However, if you incur travel expenses from your office to your client, why you need to go to the client? Because you want to get a business income generated by the client. So therefore, you incur the travel expenses in connection to your business income, creation of your business income. Therefore, in that case, when it is exclusively incurred for the purpose of the business, of course, it will be deducted. However, if it is incurred for the purpose of personal motive, therefore, it will not be deducted. Okay. Then we move on to incurred. Okay, what is actually incurred? Alright, you learn in accounting, alright? You learn in accounting, you learn accrual basis. Okay, so therefore what will happen is that let's say whenever you have expenses, okay, of course sometimes you pay on cash basis, therefore immediately it will be recognized as an incurred expenses. However, sometimes you did not pay your expenses immediately by cash, therefore it will become payable. Okay, therefore you accrued for it. Alright, for instance, a simple example, okay, you use electricity first. Alright, then only at the end of the month or in the following month, then only TMB will come and do the meter reading, and only they will issue the bill. Okay, so then only they will bill you for the amount of the services that you have used earlier. Okay, so sometimes, most of the time, if you go for the credit basis, the services has been rendered, but the expenses has not been captured. Okay, but normally you capture because based on accrual basis, you will capture that because it has already been incurred. Okay, so that is actually when we're talking about incurred. That means it must be something that committed or liability that has actually showed the existence. Okay, because when you're talking about accrual, it's actually you accrued your liability. Okay, so when talking about incurred, alright, so in general, most of the time when the operating expenses, you can see clearly it is incurred basis, therefore it will be deductible. Alright, however, there are some expenses in the P&L which is you recognize as operating expenses, but it is not uh, in actual case, actual practice, it is actually incurred. Okay, you just estimate the amount. Okay, but still the amount is actually captured as part of your operating expenses. Okay, a common example would be provision. Alright, provisions such as accumulated depreciation, what actually you do. Alright, when you buy your fixed asset, of course you recognize as a payable, okay, and then once you pay, you recognize everything, the whole amount as your assets, isn't it? Okay. However, on monthly basis or on yearly basis, you will depreciate your assets. Okay, you will depreciate your assets. So what will happen is that either at the end of the month during the closing or at the end of the year, you will do adjustment for your depreciation. Okay, whereby you calculate how much will be amount the depreciated value, then you just do the book entry. Okay, so in this case, do you actually incur, okay, do you actually have something that incurred or outflow of money later on? Okay, in general, no. Right, another example will be provision for doubtful debts. What will happen is that, right, normally you will estimate at the end of the year how much is the fair value of the bad debts. Therefore, you will provide whatever amount that cannot be collected as your provision for doubtful debts. So again, this is also just a book entry. So when there's the only book entry, provisions in nature, so most of the time it is not considered as an incurred expenses. Therefore, it is not deductible. Okay, the next one we move on is in the production of gross business income. Meaning, whenever we have any expenditure or outflow of money, okay, therefore, or even without the outflow of money, therefore, we need to determine, alright, is it in the production to produce gross income, business income, or other than that? Okay, so if we can prove that, okay, so this one also relate back to the motive just now. So if we can prove that whenever we incur that expenses, okay, whenever we incur the expenses, we can directly say that it is actually in the production of business income. Therefore, that expenses can be deducted. Okay, so it must be related to your business activity. Okay, so in general, when we do testing for section 33, subsection 1 for general deductions, meaning if the expenses to be allowed to get exemption for deductibility, therefore they would actually follow this kind of criteria, meaning that it can be either be outgoings or expenses. However, it must be wholly and exclusively incurred in the production of gross income. Okay.